Hey, and welcome to Tax Tuesday with the Tax Queen. I am Heather Ryan, also known as the Tax Queen, and I serve digital nomads, RV entrepreneurs, anyone who is running a business or doing real estate or anything with tax questions, tax issues, and that's what we're here for. So this is our monthly Tax Tuesday where I answer your questions live. So if you're here, just give me a thumbs up, give me a heart, just say hello. I'd love to know that you are here. And yeah, it's exciting to be here. We're past tax season, right? But there still can be questions. Now is actually a great time to start really digging into 2024 numbers. So this tax season, right, we were looking at last year, 2023. But if you wait until tax time to even think about tax savings and tax planning, it's actually too late. So right now is a great time to really start digging into your questions and your finances, making sure things are organized and you're set up properly for the proper tax savings so that when you go to file next tax season, you're all set and your numbers are accurate. You can get all the credits and the deductions that you are available or are available to you. So let's dive in. I do have a few questions, and if I don't have anything live, I'm happy to answer some of questions live. But if I don't see anything live, then I will just make this short and sweet. The first question is what is the difference between an S Corp and an LLC? So S Corp is strictly tax election. Okay, let's repeat that. An S Corp is a tax election. LLC, on the other hand, is a legal entity structure filed with your state. So those are the stark difference, right? An LLC can elect S Corp taxation, right? So are we starting to understand the difference? LLC is your legal structure filed with the state, and then the S Corp is a tax election. All right, I'm not going to go into that any further. If you have questions, feel free to drop them in the chat. I do talk a lot about S Corps, and I'm happy to answer the questions, going into differences and taxation and all of that, but I don't want to do that, take too much time on that question here. The basic difference, remember, S Corp is a tax election. LLC is a legal entity structure filed with your state. And an LLC can elect S Corp taxation. So next question is, can you clarify the rules regarding domicile and state taxes? For instance, if someone is domiciled in Texas, but spends a significant amount of time, potentially an entire year in a state that does have state taxes, are they required to pay those state taxes? So this is a multi-part questions here. So this is the first question in this, and the answer is yes. Pretty much every state says if you spend time there physically in the state, especially a year, right, that much time, you are taxed as a non-resident, or it could actually be as a resident for tax purposes. So 43 states with state income tax, and they all treat it a little differently. But chances are, if you are physically working in a state, you owe state taxes to that state, whether you are actually considered a legal domicile or like resident of that state, it doesn't matter. So if you're a resident of Texas, but you're living and working in with your RV, let's say in Mississippi, chances are you're going to owe Mississippi state tax. And then the second part is, what if someone owns land in a state? Do they need to pay state taxes? So owning land in a state doesn't necessarily make you pay state taxes, right? What are you doing with that land? Is it rental? Is it creating income for you? Is that land serving as a home base and as a residence or a domicile address? Okay, that's what we need to look at. So there's not really a just because you own land doesn't mean you pay taxes to that state. Well, you pay real estate taxes or property taxes maybe, but not exactly income tax. Are there cases where you have to officially change your domicile state, or can you keep any state you want? So really you need to pick a domicile state. That's the whole idea behind domicile. Like, this is a little more legal than tax. A domicile is you are saying you are a resident of that state. That is where you intend to return to. So even if you're traveling right? That's the whole idea. So that you are tied to that state. You probably vote in that state. You have a driver's license. That's where your address is, right? Your legal address. And so that's how you can get insurance for your vehicles and all those things. So really, that's a legal question. But again, some states consider you a resident and they don't really care about the whole domicile aspect. They consider you a resident if you're living and working there. And so it's a really state by state basis. So if you really have further questions about this, whoever submitted this question, please reach out and get those questions answered, whether it's a lawyer or a tax person. Next question. I'm new to reporting distributions for an LLC. The LLC is a partnership between myself and my husband. We file taxes jointly. If we pay estimated tax throughout the year directly from the partnership's checking account or the LLC, is that counted as a cash distribution? So absolutely. So you have a multi-member LLC treated as a partnership. Doesn't matter that you're husband and wife, right? You're treated as a partnership. You have a multi-member LLC. That is the default treatment. And the LLC itself is not paying taxes. You are, right? You are responsible for your taxes. Okay, that LLC is a pass-through entity. That's what we call it. So all of that income is passed through to your personal return. And on your personal return, you are paying taxes for that entity. That means if you are using that LLC bank account to pay your taxes, it is absolutely a distribution to yourself or your husband, your partner. That's the answer to that question. You don't actually report that anywhere. It doesn't count as income or anything to you. That clears that up. I deliver and set up an RV. I write down my mileage for all the trips pertaining to the RV. I keep fuel receipts. And is the mileage and fuel both exemptions or even my time? Cleaning and cleaning supplies. I do not have a business name. It is under my personal name. So this is when you're renting an RV and this person is taking this RV, driving it and setting it up for the renter. In this case, we're talking about number one question is mileage. So mileage has two ways to be deducted. You can take the standard mileage deduction, which is just literally just recording the mileage you drove with that vehicle and multiplying that times the standard IRS rate that they offer for that year. And that's your deduction, right? So that's really like, we'll call it the simple method. It's actually the standard mileage deduction. So the other method is to take actual expenses. Actual expenses means you still need to record your mileage. So number one, record your mileage, all mileage for that vehicle. Number two, record all expenses. So that would be your fuel, your maintenance, your insurance, your registration. If you bought new tires, whatever it happens to be, all expenses have to be recorded in addition to your mileage. Okay, these are actual expenses to that vehicle for putting that vehicle on the road. Once we do that, we take the percentage of business use. In this case, it may be 100%, right? Because we're only driving to drop that RV off for that renter to use. So it's 100% mileage, and that would mean 100% of our expenses. Don't forget, you also get to take depreciation here. Which is a really important thing. And if it's an RV versus a trailer, that does make a difference, like a drivable, like a motorhome or a Class C, that makes a difference versus a trailer, versus, taking the truck mileage, and then you still get to appreciate the trailer. So I definitely recommend if you're doing a rental of an RV to get in touch with a tax professional that can help you and make sure you're taking advantage of all the deductions and expenses available to you in the correct fashion and how you're reporting it. So be really cautious with that one. And then the last question I have for today, so we're going to keep this hopefully short and sweet. I'm looking to start a new business and I need to choose the correct business entity in order to maximize my tax benefits. If I start the business as an LLC, what's the best option? So really the best option, I know a lot of people say LLC, right? LLC just like thrown around. Everybody says that be an LLC, and I'm here to tell you that an LLC is not a tax savings avenue. LLC is a legal structure, and answer this in question 1, right? So what are you looking for when you're setting up the business? Are you looking for legal protection? Or are you looking for tax savings? Most startup businesses, what I see, like very small startup businesses, content creators, you don't need anything. You don't need a business entity to actually have a business. You can just use your legal name. And yeah, I think it's misunderstood. So if you're interested in learning more about business entity, I would suggest going on to my website and checking out this article. Sorry, I'm typing this in as I'm trying to talk here, because I think that this would help you just me understand business entity structure a little bit better. So it really depends. There's no one right answer for this, and that's why I will not give one, if you're noticing. Again, LLC is a legal structure, not a tax one. So the taxable structures are sole proprietors. You can have a single member LLC and you are a sole proprietor. You can have a multi-member LLC and now you're a partnership and that's your taxation. So you're understanding the difference here. And so that's why from a tax perspective, it doesn't make a difference if you have an LLC or if you're just operating under your legal name. Or maybe you file a doing business as a DBA because you have a catchy title or something that you want to use. But either way, it's the same for taxes. So, and especially as a small startup business, I don't see much savings in doing anything different than that. There are other business structures that are available. Again, it just depends on what you're looking to do. What's your growth projections? What's your exit strategy? So yeah. So feel free to jump on that link and see. I also have a thing learning about LLCs because it is such a popular thing that I hear everyone talking about. Everybody wants to be an LLC. And I think there's a lot of misunderstanding about what that is and what that means. So just be aware of that. I thank you for joining me. Those were all the questions I got. And the next one, let me just grab my calendar. I didn't get it out yet here, is June 4th. So Tax Tuesday at 10 a.m. Mountain Time. June 4th will be the next one, and I hope to see you there. Please be aware, now is the time to really be learning and researching. I know a lot of us put tax season behind us and we don't want to think about it, but really now is the time to be planning. So take advantage of all those deductions and credits and expenses that are available to us. Setting up the best entity structure for you for tax savings. Now's the time. So I hope to see you in June. Otherwise, have a great month.